What is up, everybody? Welcome back to the channel. So today I wanted to go over my reaction to the latest Meet Kevin video posted earlier today, where he explains that he is, quote, ending his channel. In this video, I'm gonna go over what he considers his future investment strategy, what my thoughts on this investment strategy of his is, as well as why I think that this could be a cautionary tale for all of us on how we were invested and how we should be invested into the market going forward. But first, you guys, if you get any value or enjoyment out of this video, please smash that like button down below. It really helps me with the YouTube algorithm. Would truly appreciate it. Now, onto the video. So if you haven't been following Kevin like I have, I'll give you a little background in regards to where he came from and what he's known for. He started out as a real estate agent like I am, as well as a real estate investor like I am. But as the COVID pandemic began, he started posting and publishing these YouTube videos on stimulus money, PPP loans, things like that. That's when his channel really started to grow very quickly. As he claimed fame on YouTube very quickly, he started focusing his videos on stock market investing, being heavily invested in stocks like Tesla and other tech companies with high growth, high PE potential. To Kevin's credit, he made a ton of money in the market and probably made even more from YouTube and from selling his courses. But since the most recent downturn, the stock market correction that we've seen in the past month or two, he has announced that he's selling it all because we have an imminent crash right in front of us. I did publish a video the day that he announced he was selling it all. I will put the link in the corner here. It basically explains my speculations on why he sold it all. Now, if you're unfamiliar with my investing strategy, I'm a buy and hold long-term investor in broad index funds that are based off of the S&P, like VOO or VTI. So his decision to sell all of his positions after a correction already started seems like a horrible move to me. Just today, MeetKevin posted an update video basically sharing the news that he doesn't regret selling and that he's canceling all future market open and market close live streams that he would usually have on a daily basis. Some may question his true motives here, whether he was margin called, whether he owes money to some private party. Is he a degenerate gambler? I don't know. I'm not gonna go over any of those things in this video because I don't really wanna speculate any more than I already have on a guy that I don't know personally and a situation that I definitely don't know. But what I do wanna get into is his supposed investing strategy. So let's get to his video. He starts off his video by saying that he doesn't regret selling because he still sees substantial pain for us and the markets in the future. He said this is most likely not going to happen when the consumer price index data is released, but it could be as early as when the Federal Reserve next meets for their policy decisions, the first week of March. But he then goes on to say that the pain may not happen until Q1 of 2023. That's a full year from now. His reasoning is this: he thinks the markets are still mispricing the risks that we have ahead, that corporate balance sheets are high, that it's highly likely that inflation will continue, and that the bond market is pricing in perfection, that the Federal Reserve will be able to manage inflation perfectly, that somehow when supply chains fix themselves, that companies won't take advantage of their pricing power in order to boost profit margins. Now, most people think that this is already priced into the market, but he disagrees, and he thinks that the worst is still ahead of us. He admits that he is not capable of timing the top or the bottom of the market, but what he's trying to do is to time the more general long-term market cycle.
My goal is if we end up rotating from the top of a market cycle to the bottom, that we have the opportunity to invest together at the bottom of the market. That is what I am very excited for. Because if you could time a market cycle change, which is something that requires a lot of patience going into the market cycle change, and gives you time when you're at the bottom of a market cycle change, but requires a lot of capital and cash to really have the best opportunities, then I believe you could truly make revolutionary changes to a portfolio. No guarantees, of course.
He still believes in sitting out of tech stocks as well as just most, if not all, US stocks. But he says that he is being patient because patience will be rewarded. He says he is preparing himself for a massive transition where he will take his cash from selling stocks and real estate and putting it into what he calls a new venture. So here are my thoughts. I have said in the past that I respect Kevin. He seems like a very hard worker, and I can respect the hustle and energy that he shows on a daily basis. But I'd be lying if I said that I haven't had concerns over him and other younger millennial investors that haven't ever never even truly been in a bear market, never mind a recession or even worse. I was always afraid and concerned that millennial investors were invested too heavily into tech and high growth stocks and think that the market only goes up. And I was always afraid that once a downturn came, that they would be selling very, very quickly because they don't have any experience dealing with it and they let the emotions get the best of them. You see, I'm about the same age as Kevin, and I can completely understand that after 12 years of a bull market, you think that you know it all. But the reality is this. Number one, nobody can time the market. That is why the best bet is investing long-term into US index funds, because even though it's not 100% certainty, more than likely, more than likely, US stocks will be up from their levels that they are now 10 years, 15 years, 20 years down the line. And if they're not, we have bigger problems on our hands. Number two, you need patience. He mentioned that patience is necessary in order to time the market cycle that he's trying to do. I'm going to actually agree with him on this, but on the opposite side. You need patience in order to ride out the short-term noise in order to get and hit those long-term goals in investing. But selling during a correction makes no sense. And that's not patience at all. That's emotion. Number three, we all need to be more well diversified. From the outside looking in, it seems to me like Kevin didn't quite have the risk tolerance that he thought that he did. He was heavily invested in high growth, high PE stock. And they've been on a huge run, and I'm sure he made a ton of money from it. But many of those stocks have taken a huge hit, 60, 70, 80%. And that may have caused him to just simply panic sell. Now, nobody's perfect, including me or anyone watching. I don't want to bash on the kid too much, but to sell it all and not have any exposure in the market, especially during a correction, is ridiculous. But the smart move would have been to sell some, trim back a lot of your positions in the high PE growth sector, and start putting it into more broad-based index funds, something more reliable, more stable for your family. Even if you think that a recession is looming very shortly from now, I would never have no exposure in the stock market, because the reality is nobody knows. Nobody knows the future. So Kevin talked about attempting to time a more general, broad market cycle. So here's the long-term general market cycle for US stocks. They go up. As stated before, I am a long-term index fund investor. I only put money in the market that I don't need for the next 5 to 10 years at a minimum. And I sleep well at night knowing that the bet that I'm making is that the US stock market will be up significantly higher 10 years from now than it is today. I know it is difficult to take a breath and take a step back in turbulent times, but these times are really when you should be zooming out on your chart and looking at the long-term, consistent line that goes up for the US stock market. Going back 80 plus years, it's been like this. Even short term, as of today, from the quote unquote bottom, because we don't know if it's a bottom yet, it's up 8% from that level already. And that's just in the last few weeks. How much in potential gains is he losing by sitting on the sidelines betting that he could time the market perfectly? He also mentioned in his video excessive consumer debt, excessive market valuations, as well as excessive real estate prices. Now, all of these concerns are legitimate, but my question to MeetKevin would be, what has changed? These are not new concerns. You could have said the exact same thing a year ago. And yes, eventually these concerns will come to fruition. Eventually we will have to pay the piper if we aren't already. But here is the biggest problem. This could happen today, this could happen tomorrow, or it could happen 15 years from now. Nobody knows, including MeetKevin. That is it for today, guys. Thank you so much for watching. Let me know what you think about MeetKevin's investing strategy down below in the comments section. Is this a good strategy, or are you more on my side where he's going to be losing out on huge potential gains? Also, if you want to learn more about investing in stocks, investing in real estate, as well as just general entrepreneurship, please consider subscribing to this channel. Would greatly appreciate it. Thanks for watching the video again, and until next time.